Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into what's impacting mortgage rates on a daily basis, whether it might come from something from the economic calendar or headline news or geopolitical. Sometimes even the market's sentiments change in the markets where good news is now bad news. And if somebody's on the sidelines and watching all this, may be a little confused as to what's going on. We try to give that explanation to you so that way when you're if you're in the market to maybe look at refinance or purchasing, you're following the rates, you want to get all the information you get, and hopefully this will give you the information you need to make an informed decision as to whether to lock in or float a little bit longer. A little bit about myself is I am a loan officer. I do work with the national lender. We're here to help you guys out, whether if it's from refinance or purchase. If you need to get that pre-approved so you can buy the next property, we can help you do both. We can also help you run some numbers and make sure that the refinance might look meets what you're looking to do. We can certainly help you with those avenues as well. However, think of us also as a resource. We're here to answer any questions you might have, whether it might be something for questions on the mortgage rates or programs that might be available or other things that might come to mind that you may have questions on. We're certainly here to try to help you guys out. So please feel free to reach out. Without further ado, we'll jump right into it. We do got a bit of data to go over on the economic calendar. We'll start out with housing starts for the month of January. So in December, we had 1.702 annualized units, but it was actually revised slightly higher to 1.708 million. Forecast was supposed to be a slight dip to 1.7 million, and it dipped further down to 1.638 million. So it dropped 4.1% month over month. Now we also got the building permits, which are future housing starts. Back in December, it was out at 1.885 million seasonally adjusted units. Supposed to drop down to 1.76. However, that one rose to 1.899. So we got an increase in building permits there. So that was good news there. However, of course, housing starts is a bit of disappointment, but a lot of that could be due to weather. We had a bit of weather, and of course, we started seeing a spike in rates around that month as well. So it could be a little bit of a combination of the two. We did see an increase if you go into those numbers a little bit further. Also, there was a drop in the multifamilies and an increase in the single-family homes. So that's obviously good news for consumers here. To move on here, why don't we look at the Philly Fed? Philly Fed basically is an index on the business or manufacturing in the Philadelphia region. It had a 23.2 back in January. Forecasters have a slight dip at 20, and it dropped much further to 16, which is obviously bad news. This is the lowest we've seen since back in December, basically, the last couple of months here, when things typically slow down. We also got jobless claims that we get every Thursday. So last week's number was revised slightly higher from 223,000 to 225,000. Forecast was supposed to dip a little bit further down to 219, and instead it went the opposite direction, went up 248,000. And of course, we could just kind of glance here, look at the continued claims, and those have dropped a little bit. So more people are coming off the unemployment rate, which is good news. Let's take a look at mortgage-backed securities. Right now, stocks are down. We're getting our cue from headline news on this, and this is what's really driving the markets a bit today than anything else, and that is, of course, what's going on with Russia and Ukraine. There's a lot of different reports going back and forth between the two. Even at one point, it sounds like somebody said there was some tank firing on the eastern border of Ukraine, and so there's a lot of stuff going on back and forth right now. We haven't seen any invasion as of yet, but there's warnings that it could occur at any time, basically. So as a result, we're up about 38 basis points, which is helping out mortgage-backed securities. This is coming from stocks being in negative territory, money moving from equities to a flight of safety going into mortgage-backed securities. So the bad news is now good news for mortgage-backed securities. We're kind of like the undertaker of the markets, where bad news is a lot of times good news for mortgage-backed securities or bonds in this case. For us. So here's a kind of a closer look of it. So as you can see here, we had when the announcements of the Russia was going on, it spiked upwards, and as we said, it kind of subsided a little bit. We're kind of right now about up. Well, it looks like now 34 basis points. But here's where we are on a daily basis. How it fluctuated throughout the day so far. But the biggest spike, of course, was between 7 and 8 o'clock this morning here, with the news of what came out of Russia, Ukraine. All right. So again, the good news is that mortgage rates improved a bit from yesterday's pricing, and the treasuries are back down below 2% right now. We're testing a new technical floor here. As you see, the little wick there has been testing it. So we're just under 1.9. We're at basically 1.97 currently for the day so far. Now, lastly, we'll go over the average rate for conforming loan limit. This do have points built into it. So, and right now it's about 4.1 or 4.10, and then 15-year is at 3.34. So we do see these kind of climbing a bit over long term. And so if you guys are out there long term, we are looking at climbing upwards here a little bit. So how much of an impact the Russia-Ukraine will have on rates if we get much more improvement, it's hard to say if conflict does arise from that. But in any case, over long term, we expect mortgage rates to continue to rise. Now, of course, on the back end of all this, investors are still concerned about the Fed's happenings. They still, after Fed minutes were released yesterday, they weren't exactly clear what's going to happen on Wednesday. I mean, on the FOMC meeting in March, whether it might be a half a point or a quarter point. They think the balance sheet reduction will be announced later in the year, maybe as soon as June. But right now, that's kind of up in the air as to what's going to happen. The concern, of course, is if they, the reason being is that with the Fed fighting inflation, they do feel that it will obviously slow the economy and slow growth, business growth. And that could, again, with these yield curves flattening and everything, this could put us into a recessionary, historically it's put us into a recession. So that is what's concerning investors on any moves from the Fed going forward. So just be aware. Again, if you guys need any help, any questions, please reach out. If you guys like these videos, please help us out. Smash that like button and share us. We greatly appreciate it if you guys can help us out in that regards. But otherwise, we thank you very much for all your time and watching. You guys have a great rest of your day, and we'll look forward to see you guys in tomorrow's video. Bye-bye.